Attention all passengers. Do you want a front row seat for the future of air travel? The Skift Idea Awards are back, and the Airlines and Airports category is where innovation takes flight. From next-gen passenger experiences to bold sustainability moves, we're celebrating the ideas transforming the future of aviation. Airline Weekly Lounge listeners get 50% off their first entry with the code AW50FORYOU. That's AW50FORYOU. Head to live.skift.com to start your submission today. Hello and welcome to the Airline Weekly Lounge. I'm your host Gordon Smith, and I'm joined as usual by co-host Jay Shabat. In this week's show, we're filling you in on an airline leaders conference, updating our Q1 earnings tracker, and looking ahead to financial results from Singapore Airlines. Hey Jay, how's it going?
All right, Gordon, welcome back from your trip. Tell everyone where you were last week.
It sounds very glamorous. I was in Greece, in Athens, for the Kappa Airline Leader Summit, which is not an event I'd attended before, but it was great. Yeah, lots of fun. Obviously, our Skift events are far superior in every way. I wouldn't possibly be having anyone pick that event over our own, but it was great to get some additional industry perspectives and be in the audience for once, as opposed to being on stage. Because you know as well as I do, Jay, sometimes when you're on stage and you're asking the questions in quick fire and you're sort of trying to think of 1,000 things at one time, it can all be quite overwhelming. So it was nice to sit back with my notebook and sort of just take stock of the industry through a different perspective.
And what would you say was the mood? Can you characterize how people were feeling? Did you get any kind of vibes about one way or another? Maybe, hey, the industry is feeling a little nervous with all the tariffs and whatnot, or alternatively, is it's kind of what we heard from some of the earnings calls, Air France and Lufthansa, that hey, things are going well. We're optimistic. We think we're going to have a good summer. What was your takeaway? What'd you feel?
The takeaway, this is a bit of a fudgy answer, a politician's answer, Jay. I apologize in advance. It really depended on who you were speaking to, because although it was Eurocentric in terms of the guests and speakers, you did, even within that region, have a number of different voices. But we also had some notable attendees from further away. We had Peter Elbers, the CEO of Indigo, was there. And we had Willie Walsh, the Director General of IATA, who obviously offered a more global perspective by definition. And within the sort of delegates, there was an international flavour as well beyond Europe. The general mood music, if I had to distill it down, was one of cautious optimism, I would say. I think for most intents and purposes, people know that summer's going to be okay. The Northern Hemisphere summer, that is. The concern, either privately or publicly, depending on who you were speaking to, comes Q3 into Q4, when early booking trends suggest there might be a little bit more softness, depending on where you're flying and who you're flying with. But the impression I got, sort of taking in everything that was said on stage, as well as the sort of the water cooler coffee room moments, and maybe the slightly more discreet conversations with industry leaders and other stakeholders, is, you know, we're actually doing okay at the minute, but they didn't want to be too bullish on that. They know that things can change very, very quickly, and arguably have changed very, very quickly, for better and for worse. Before I let you jump in, Jay, actually, you asked me if there was a particular quote or a particular nugget. The perspective that really stuck with me wasn't actually from the stage at all. It was from somebody that was sitting just directly across from me, a meter and a half, 4 foot, 5 foot. I don't know what the metric and imperial conversions are there, but it was Akbar Al-Bakr, the former chief executive of Qatar Airways. Obviously, he stood down from the role in 2023. He's officially now an advisor to the Qatari Prime Minister, and this was basically part of a sort of question and answer segment chaired by the CNN business anchor Richard Quest, and he sort of opened it up to the floor and said, anyone got any questions or observations? And yeah, I didn't actually know it was Akbar until he started speaking, and he had a very, very, very sort of bleak forecast for the industry. And Akbar, as anyone who has been following the industry for a while, knows that he can be pretty outspoken, even in his Qatar Airways days. And he said here, quote, "The industry, in my opinion, is going to have a very turbulent several years." He listed a number of reasons. He said because of the trade conflicts that are going to happen between countries. He also said global supply chains are going to come under even more scrutiny. Why, you ask? He says all the military spending, the increase in military spending, much of that fresh capacity in the production chain is going to be diverted to military demands amid rising geopolitical tensions. He said, quote here, "Even if the supply chain is going to ramp up, a lot of that same supply chain will go into the massive defense spending that is going to go up. So actually, it will be even more difficult for airlines to get their hands on the supplies they need." He also pointed a finger at the not the energy suppliers. I'm sure they would be in the mix somewhere as well with fuel prices, but it was actually the engine makers. And he said that the two largest engine manufacturers, without actually name checking them, are poised to, quote, "take massive advantage of the constrained environment." And his final comments were, quote, "There will be, most probably in my opinion, a recession eventually in the industry because of the many conflicts that are going to take place around the world." So, with that rosy forecast, Jay, over to you.
Wow, you made me. I was happy up until I was having a good day up until you presented that. Always interesting to hear from him and his perspective. If I'm not mistaken, you wrote an article about that this morning. We're talking Monday, by the way, as we usually record this podcast every Monday morning. I see here, ex-Qatar Airways CEO warns of very turbulent years ahead. I have not had a chance to read that yet, but I most certainly will. And where's that on Skift website?
Skift.com.
Skift.com.
And remember, Jay, Airline Weekly subscribers get access to all airline content on Skift.com as part of their subscription. So there's another value add if you needed one.
Always the salesman, Gordon.
But we also had a chance at the CAPA event, I say we, the royal we, to speak with Willie Walsh. And anyone that joined us in Dallas-Fort Worth last year for our Skift Aviation Forum knows we had Willie on stage there. We had a great time with him. And he was very generous with his time in Greece. And he was able to sit down with us for about best part of 30 minutes one-on-one. So I had my microphone out, so keeping an ear out for some interesting observations from Willie in the podcast coming up. Not today's episode, far too much to discuss, but in a future episode. Keep your ears tuned to that, Jay. And we should also say good luck to our colleagues who are in Bangkok right now, because we've got the Skift Asia Forum as well taking place on May 14th and 15th, and the Thai Airways CEO is going to be speaking there on Thursday evening local time. So we can't wait to see what he's got to say, because, Jay, this leads me very neatly into our next segment. Q1 for Thai Airways was very, very good.
It sure was, yeah, as their earnings have been very, very good over the past couple of years here. Their very successful bankruptcy restructuring program has produced excellent profit margins. And once again, in the first quarter, they did fantastically well. So Thai had a 26.5% operating margin. It is peak season for them. So, let's keep that in the back of our heads. But even so, peak season or otherwise, that is quite a result. And they were we're pretty far deep into Q1 earnings season now, and of all the airlines that have reported so far around the world, Thai is number one with that 26.5%. Nobody's been even really close, with the exception of maybe Copa at 23.8. That's pretty close, would you say, Gordon? But other than that, that's they're by themselves at the top. We'll see if anyone else can displace them, but I doubt it at this point. Maybe we have a couple of other airlines yet to go. Maybe Bangkok Airways, which is a Thai Airways rival. Perhaps they'll come in pretty strong, but I think Thai's headed for the Q1 crown here. Yeah,
I would very certainly agree with that, Jay. Any regular listeners to the show know that we've been keeping abreast of the various Q1 comings and goings You've kindly produced for me, Jay, a beautiful chart here listing 50 airlines. And before we get too excited, some of those are the subsidiaries. So, for example, we've broken down IAG into its various component parts. But yeah, we've got a nice solid 50 here right in front of me.
That chart is on LinkedIn, by the way. I posted it. So if you,
superb.
If you aren't following me, you can check that out there.
And we'll pop that in the next issue as well?
What we'll probably do is for the issue, we'll probably wait for the final tally when everybody's in a couple of weeks, and then we'll run the whole world for Q1.
We run the world.
We run the world. Yeah, that wasn't exactly what I was trying to say, but but you're right. We do run the world from our Airline Weekly podcast studio.
So, without wanting to repeat anything that our listeners will have heard in previous weeks, are there any airlines that are fresh? I'm thinking maybe IAG. They reported just last Friday as we're recording. Are there any fresh numbers that we can offer our listeners compared to weeks gone by?
Yeah, well, we do have a couple of carriers that came in last week that we just didn't get into our issue this week, but we will after everybody's listening to this, so that following week. But Copa, for example, I mentioned them, how they did a nearly 24% operating margin. So no stranger to success. Those are our friends in Panama. Nothing surprising there. We have Avianca, another Latin American airline that came in strong, about 10.5%. And who else do we have? Yeah, we had quite a few last week. We did have a feature story on Allegiant. They reported last week, and they are doing well by normal standards. I mean, Allegiant, where are they on the list? 9.3% operating margin. That's excluding losses at their hotel. Although I think the hotel actually made a little bit of money this past quarter, but I'm excluding the hotel numbers from that 9.3% figure. So Allegiant did well.
That must have been my room service bill after a week's stay. So just getting the Ben and Jerry's and the Häagen-Dazs coming up to the room.
Was that what flipped them in the
I think so. That was single-handedly my room service spend at the Sunseeker Resort.
Nice. And they, however, 9%, that's pretty good. But compared to what they were producing before COVID, 9% is pretty weak. I mean, they were doing 20% margins in that range. So they were Copa-like before the whole COVID pandemic and its aftermath. So, and I should recommend to everybody. So, Gordon, how a lot of famous American CEOs, whether it be Jamie Dimon of J.P. Morgan or Warren Buffett, Berkshire Hathaway, or Jeff Bezos when he was running Amazon, they would pen they would write an annual letter to shareholders every year in their annual report. Well, Allegiant's founder, and until recently, I think he retired again, but CEO Maury Gallagher has in their latest, I think it's the 2023 annual report, has a letter to shareholders, and it lays out his thoughts on what's transpired with the low-cost carriers in the U.S. since the recovery from COVID. And as I'm sure most of the listeners to this podcast will know, it's been a rough going for American low-cost carriers, whether it be Southwest, JetBlue, Frontier, Spirit, and even Allegiant, to the extent, like I was saying, they're way underperforming the way they used to pre-COVID. And he sort of explains why. And, you can guess, it won't be new or novel to many of you, the explanations, but obviously just big increase in costs, particularly non-fuel cost. And he also pointed out how some of the big guys like United and American Delta, because business travel didn't recover so quickly after COVID, a lot of those big guys started chasing more leisure markets, and that tended to overlap with the LCCs. So yeah, I recommend everybody read that. I thought it was a good read, rather interesting. So yeah, that's Allegiant. But yeah, we had the big three Chinese carriers report last week. 2 of the 3 lost money. China Southern came out a little bit in the black, but it wasn't still wasn't a very good quarter for any of them. There's still Chinese carriers are still struggling. A lot of it is just that their long haul, their international markets just are not what they used to be. Domestic seems to be okay, although there is a lot of competition there. There's some issues with foreign currency exchange rates, things like that. But there's I didn't give you an exhaustive list, of all the carriers that have reported last week, but that's a good chunk of them.
Thank you for that, Jay. Yeah, we don't want to repeat ourselves. So, if you're wondering what happened to a particular airline in a given week gone by, then we invite you to take a listen to earlier episodes of the podcast, or even better, take a look at the back issues of Airline Weekly. We are going to be speaking about an airline that has yet to report, a relative laggard, Singapore Airlines. They are coming up as we're recording here this coming Thursday, but that is going to be in part 2, so don't go anywhere. Just before that, a quick reminder to send any questions or comments that you might have for us to podcasts@skift.com. That's podcasts with an S at the end. And please don't forget to follow or subscribe to the podcast wherever you're listening or watching. And if you are enjoying the show, please rate us 5 stars or leave us a positive review so we can continue to spread the word about the Airline Weekly Lounge. Don't go away. We'll be right back talking Singapore Airlines. Attention all passengers. Do you want a front row seat for the future of air travel? The Skift Idea Awards are back, and the Airlines and Airports category is where innovation takes flight. From next-gen passenger experiences to bold sustainability moves, we're celebrating the ideas transforming the future of aviation. Airline Weekly Lounge listeners get 50% off their first entry with the code AW50FORYOU. That's AW50FORYOU. Head to live.skift.com to start your submission today. Hello and welcome back to the Airline Weekly Lounge. I'm Gordon Smith, joined as usual by co-host Jay Shabat. We are discussing Singapore Airlines in part 2, Jay. They're due to report, as we're recording here on Monday, on Thursday. Tell our listeners the top line details that they need to know going into SIA's results.
Sure. So consider this a Singapore Airlines preview. We'll see how they do by the time you listen to this. Some of you will have already seen the Singapore Airlines results, but I just wanted to point out a few things to watch. And before I do that, I'll give you a little bit of a quick review of what their profit margins have been like over the past couple of years. So Singapore Airlines, as many of you know, has a very storied history, a very successful history. If you go back 20, 30 years, I mean, this is an airline that routinely was among the world's most profitable airlines, often with excellent margins, particularly for a global long-haul wide-body carrier, always kind of right up there at the top. And really, one thing that's never changed at Singapore Airlines has held that reputation among travelers for being, first class in every way. Maybe not universal, but I think there's general consensus that they provide really good service, and they new planes and new products and heavy investments and on the service side. However, during the 2010s, that wasn't a good decade for them. I mean, relatively speaking, they struggled a lot, and you can come up with as we have come up with, we've written a lot about them over the years, Singapore Airlines and Airline Weekly. But at the end of the day, I think what really was difficult for them the last decade was just they faced a lot of additional competitive capacity. And if you think about all the new seats and flights that the Gulf carriers were adding, and that all these new Asian low-cost carriers were adding, and even Chinese carriers were adding, and some of the other airlines within the ASEAN region. So I think that alone probably will take you pretty far in explaining why they had a rather uninspiring decade during the 2010s. They, just to give you a number, so I want to say in 2017 they had like a 4% margin, 2018 5%, And then 2019, 6%. So you can see they were kind of, creeping back up towards double digits, but still sort of in that mid single digit area, which, for them, not terribly inspiring. Of course, we had the first 2 years of the 2020s, even 3 years, were really tough because of the pandemic. One thing, relatively speaking, why Singapore Airlines was in better shape than most airlines is their government, which still has ownership control. They don't own 100% of Singapore Airlines, but the Singapore Airlines government, or at least a government-owned sovereign wealth fund, controls Singapore Airlines, and they were sure to provide very generous COVID relief. So there was never any concerns about Singapore Airlines going bankrupt or having to shed assets or anything like that. So they were able to use that time to cut costs and undertake various other restructurings. And then when the travel demand started really coming back, and let's call it mid-2022, things really started to go well. I mean, you really saw their bottom line and their profits really shoot up. So in 2023, for example, they just had one of their best years ever with a 15% operating margin. Now that came down some in 2024. 10% was what they did. So it did come down a few points, but 10%, that's still a good year. A lot of that capacity I mentioned earlier from the Asian, from Asia in general, from East Asia, well, a lot of that either disappeared or just stopped growing. I mean, you think about AirAsia, they've been having a tremendous time, even to today. They're still having trouble getting all their pre-COVID capacity back up to speed. And then if you think about how one of Singapore Airlines, one of their chief rivals is Emirates, and Emirates is just growing a lot slower than they were a decade ago. So that's been very helpful. So that's a little bit of background of where Singapore Airlines stands as they go into their to report their calendar first quarter. Don't be confused. They're going to be talking about their annual results because they work on a fiscal year that ends in March. But for our purposes, just to keep everything on the same calendar, keep everything simple, we'll call the January to March period their first quarter, even though technically it's their fiscal fourth quarter. So let's see how they do. In the same quarter a year ago, sorry to throw so many numbers at you here, Gordon, but just last one, I promise. They had a very good calendar first quarter. It was 12% operating margin. So let's see when they report if they can match or beat that 12%.
They've got a lot going for them, Jay, but they're not completely immune to those macro pressures that you discussed there. Do you think we're likely to see continued margin strength there, or are these cost pressures that are not unique to Singapore Airlines, but they're certainly feeling them? Do you think these cost pressures will be starting to catch up with them?
Yeah, I mean, I think Singapore Airlines has a very good track record of controlling costs. They do have relatively low labor costs, I mean, relative to other major global airlines. So I think they have that going for them. Obviously, with fuel falling, even if there was some non-fuel cost inflation, that may be okay because you can sort of neutralize it on the fuel item line. So fuel line item, sorry. And they have new planes with low unit costs coming in and things like that. So I don't suspect that cost inflation is going to be a huge concern for them as they report. Back on the revenue side, there are questions, however, about how sustainable the demand strength that they've seen over the past couple of years. First of all, how is it right now, and how will it continue to be as the year progresses amid all that we know is going on with the tariff war and whatnot, and the what seems to be a weakening U.S. market. I just want to make 4 points, if I may, Gordon, about Singapore Airlines. 4 points I think everybody should know or be familiar with.
Yeah, you're ready reckoner, your crib sheet.
Yeah. As you go into, if anyone's going to look at their results on Thursday and go through their materials that they produce, these 4 things will be good background for you. So one is that Singapore Airlines is extremely exposed to the long haul premium market. And is that a good thing right now? Absolutely, yes. I mean, up until, we'll see what they say about how things are looking for the next couple of months or next couple of quarters. But for the past 2.5 years or so, being exposed to long haul premium has been very fortunate. In fact, some of those really nice margins I mentioned over the past couple of years, if you want to know why they were able to achieve those margins, a big reason was because premium long haul has been so strong. So keep that in mind. They did one of the points I mentioned already was that they did have a rough decade in the 2010s. So are they back now on a much more kind of a pre-2010s path? Sort of get back to industry-leading margins, which kind of where they have been over the past 2 years. So let's see if that's sustainable. Another thing it's very important to understand about Singapore Airlines is they are betting big on India. And as I know we've talked about before, Gordon, on this podcast, Singapore Airlines now owns 25% of Air India. And Air India was merged with Vistara. They've got a couple of low-cost carriers in that sort of package as well, in that portfolio. So they really believe that that's a market that's going to grow over the future. It's going to grow rapidly over the future, and they want to be exposed to that. Is it risky? Sure. I mean, there are risks to owning an airline like Air India, which has a long history of dysfunction. They seem to be turning things around to at least some extent now. I've heard, people argue to the contrary, but I don't know myself. I haven't flown them, so I don't know service wise if they've improved their reputation or if they've improved their delivery or not. Perhaps some of you listening to this podcast will have an opinion. Feel free to email us. We always like to hear from you. So yeah, the India thing. Now it's always Singapore is such a small. I mean, Singapore is a big airline market, but it's a pretty small country, and it's really just a city state. And so Singapore, for the longest time, I mean, you can go back decades, and they've always been eager to diversify away from just their home market. And they've, if you look over the years, they've bought equity stakes in Air New Zealand, and they've bought equity stakes in Virgin Australia, and they've tried to buy into various Chinese airlines over the years. And even, I mean, this Air India thing, they were trying to buy Air India, I think, in the 1990s. So, and don't forget that they at one time owned 49% of Virgin Atlantic in London. So always trying to diversify away from, not away from, but add additional exposure beyond just Singapore. So we'll see if this India adventure works for them in the long term. And my final point I want to make here is that Singapore Airlines, they have relatively limited U.S. exposure. And I say limited compared to other big East Asian airlines. If you think about, some of the Japanese airlines, certainly the Korean airlines, Singapore Airlines, they only really fly, I think it's just New York, JFK, Newark, Los Angeles, San Francisco, and Seattle. So just those 4 or 5 coastal points that I mentioned. I think at one time they did Houston. They don't do that anymore. They may have done another.
They went to Houston via Manchester.
Exactly, and that's. I'm glad you mentioned that, because that leads me into my next point, which is a very big reason why they don't have as much U.S. exposure is simple geography. Singapore is just really too far to fly to the U.S. with most aircraft. And so what you'd have to do in the past, if you want to fly Houston, you'd have to go through some intermediate point. And as Gordon just said, that point in Houston's case was Manchester for a while. They even today, they do JFK, New York JFK through Frankfurt. That's a market. I remember I flew JFK, Frankfurt, Singapore in the 1990s. They've been in there for a long time. So that they've done that, and they're able to do that flight via Europe with a 777-300ER, I believe, Now, to do the longer flights, to the nonstop flights from Singapore to the West Coast and certainly New York and Newark, those require very long-range A350s. And frankly, on that kind of stage length, even in some cases, you have to configure the plane with a lot of extra premium seats because you just can't, for weight restrictions, you can't have that many people on there. So the economics on those long stage lengths are not typically very good unless, of course, you can manage to get just a whole bunch of premium. If you can fill up all those premium seats at really good premium fares, then you'll do fine. And it sounds like that's exactly what they've been able to do with premium demand being so strong. So maybe that's been good for them, but not easy to run those like ultra long haul A350s all the way from Singapore to the U.S. nonstop. Be interesting to see if they do add any additional routes over time. And then, of course, just the big question with the U.S. market right now is, with all these people, we just have all this data coming in of how, fewer people are visiting the U.S., fewer tourists want to go there, probably fewer business people too. I think it's more on the tourists, more affecting the tourist end at this point, but that could certainly put a dent in Singapore's U.S. network as well. And even, when I'm talking about leisure, certainly a lot of those premium seats are getting filled with leisure passengers. Don't picture them as all being, chief executives or, vice presidents flying for business. I mean, a lot of those seats up front are being filled by leisure. So that remains to be seen. If any of this U.S. turbulence that we've been hearing about and everybody's been talking about, whether or not that is affecting Singapore Airlines. Because, of course, and I'm sorry, I know I'm kind of beating a dead horse here, talking too much, but very important to remember that on a Singapore flight to Los Angeles, for example, those are not just people going from Singapore to Los Angeles. They're also people either coming from or going beyond to the Philippines, to Vietnam, to, maybe some Australia, maybe some southern China. So anything that affects, U.S. Asia demand more broadly will have an impact on Singapore Airlines for sure. Did I say too much, Gordon?
Not enough. I could have done with another 4 points, Jay.
Oh,
but
I can keep going if you'd like.
Well, I dare say we'll save it for after we've got the results in. But a great scene setter, nonetheless.
We'll respect the time of our podcast listeners here.
Yes, and our long-suffering producer Monica as well. Okay, thank you for that, Jay. Like I said, we don't have the Singapore Airlines numbers in just yet, but we will have some insights. And in the next issue of Airline Weekly as well, we'll have a sort of a bit of an analytical deep dive into SIA. Is that right?
For sure.
Fantastic.
Yeah, I'll be spending a lot of my time not on Singapore Airlines aircraft, but digging into Singapore Airlines financial data this week.
The next best thing.
The next best thing, and you know what? It doesn't even give you jet lag. Maybe a sleepless night or two, but it doesn't give you any jet lag.
No jet lag there. Okay, well, thank you for that, Jay. Just before we wrap up the episode, a quick reminder about the 2025 Skift Idea Awards. They are now open for entries, and we are spotlighting the boldest ideas from right across the airline industry. If you've got any colleagues who work in travel sectors beyond the airline industry, get them to check that out as well. But for the purposes of this podcast and with our audience, what it is, if you are in the airline and airports industry, take a look because there are some categories specific to that particular subsector. It doesn't matter if it's passenger experience, sustainability, loyalty, any of the above. Take a look at the categories there. It's your chance really to be recognised on a global stage. The awards are now in their 7th year. And the best bit of all, Airline Weekly subscribers get 50% off their first entry. The code is AW50FORYOU. That's FORYOU. AW50 for you, FORYOU. Go to live.skift.com to get the various links and details, and that will show you where to go. And if you didn't catch all that information, I guess it's a podcast, you could rewind it, but also click on the email link that was included in the Monday preview of this week's Airline Weekly newsletter. So that's the Skift Idea Awards. Deadline is, off the top of my head, June 13th, 1-3. So you don't have a huge amount of time, but still best part of 4 weeks to get your submission together. So take a look at that. Thank you to Jay for his astute analysis as ever. Thanks also to Monica, Doug, and Cole, our producers, and thanks to you, wherever you are in the world. We'll catch you next time. Bye for now. Whether you're listening to us on Spotify, Apple, or wherever you get your podcasts, please make sure to subscribe, rate us 5 stars, or leave us a positive review. This really helps us get the word out about the Airline Weekly Lounge, so we can continue to bring you this podcast every week, absolutely free of charge. And if you're watching us on YouTube, make sure to subscribe to the Skiff channel and hit the notification bell to find out whenever a new video drops.